Two insurance giants step into the spotlight, but when it comes to protecting your future, which one truly stands out? Representing tradition and stability, MassMutual. Facing off with innovation and legacy, John Hancock. Let's move beyond the marketing hype and dig into what really matters. We'll break down each category, award the points, and show you exactly who takes the lead. And trust me, the winner might just surprise you. So here's our game plan. We're going to compare them across 6 categories: financial strength, policy options, dividends, health incentives and riders, digital and customer experience, and finally mutuality, like who actually owns the company and what that means for you. Think of it like a mind map with each branch teasing one of these juicy questions. Let's kick things off with financial strength. MassMutual, these guys are like the rock star of ratings, boasting that top-tier AM Best, a double plus. And they're mutually owned, so policyholders actually have some skin in the game. There is a hint of old-school conservatism in their investments though, so less wild rides. Now, John Hancock also super solid with an A+ from AM Best, and they have the clout of a massive parent company, Manulife. But they're owned by shareholders, not policyholders. It kind of changes where the loyalty lies, right? For sheer strength and that mutual setup, MassMutual nabs this one. Policy options, here it gets interesting. MassMutual has the classic stuff: whole life, term, UL, VUL, and even indexed universal life if your state allows it. They're strong on participating whole life, which is kind of their thing. On the flip side, John Hancock comes in with term, all sorts of universal flavors, even cool hybrid long-term care policies, and they let you go pretty old with their age limits. Sprinkle in their vitality program and you've got this interactive wellness vibe. Not all John Hancock products are everywhere, which is a bummer, but for sheer range and unique options, they're matched pretty evenly here. So yeah, it's a tie. But now dividends, and okay, this is a big deal for a lot of folks. MassMutual, industry leading, honestly, they've paid out dividends for over 150 years straight. They're not guaranteed every year, but with that track record, the bar's high. John Hancock does pay dividends too, but not as often, and honestly, the rates just aren't as spicy, plus, they mostly focus on term and universal life anyway. MassMutual totally owns this category. Oh, and here's something cool. Did you know MassMutual goes way back? Founded in 1851, and they've paid out dividends every single year since 1869. That's some serious history. Now, health incentives and riders. So for MassMutual, you get a nice lineup of living benefits and long-term care options, nothing too wild but solid, but no real wellness integration, which is a missed opportunity these days. John Hancock, on the other hand, really leans into this with their vitality program. Seriously, you rack up rewards just for staying healthy, all tracked in their app. There's even unique wellness engagement, but yeah, sometimes those bells and whistles come with extra fees. If you're all about that interactive, healthy lifestyle, John Hancock definitely takes the cake here. Let's talk digital and customer experience. MassMutual gives you steady self-service online, but I gotta say, their website and digital tools are kind of trailing behind the times. John Hancock, meanwhile, flexes hard here: modern apps, easy onboarding, and all those wellness features baked right into your phone. Some of their processes are still kind of old school through agents, but overall, it feels way more modern. So John Hancock bags this one. Last round, mutuality and policyholder benefits. So here, where MassMutual shines again, it's owned by policyholders, which means dividends, voting rights, even surplus sharing. It's real, tangible perks that you just can't get at a stock company. Sure, maybe they're not the fastest to innovate, but that's the trade-off. With John Hancock, the shareholders call the shots, so no voting, no direct share in the profits for you. No contest, MassMutual wins here. Visually, if you laid this all out on a radar chart, you'd see MassMutual absolutely spike on the financial strength, dividends, and mutuality axes, while John Hancock stands out for health incentives and their slick digital game. In some areas like policy options, you'll see them pretty evenly matched. So, here's my take. If you want old-school reliability, huge financial muscle, and that whole policyholder-owned legacy thing, MassMutual is hard to beat, especially if you care about dividends or leaving a legacy. But honestly, if you're someone who's all about wellness, tech, and earning rewards for hitting those steps, John Hancock is going to feel a lot more modern and interactive. Alright, if this helped you choose, drop us a note or just subscribe for more straight-shooting breakdowns. We're all about making financial stuff less intimidating and way more useful.